Okay, before I go into a whole deep dive about what QBO does when you link up a bank feed and how it screws you up more than it helps you in terms of setting up that beginning balance, I should check and make sure that it's still the case. Maybe they have fixed this issue. So I am going to connect a real bank account for a minute just to confirm if the behavior hasn't changed. And the behavior that I'm talking about is what I expect is when I go to link up this bank account, what QuickBooks Online will do is it'll ask me how far back I want to go. And let's say I tell it I want to go back to January. If it lets me go back that far, or wherever it lets me go back to, it's going to take the balance as of that day and stick it in the register and reconcile it for me. And it is never correct. The only way it could ever be correct is by sheer coincidence that you happen to go back to a day that happened to be the first day of a new period with not a single transaction posted yet, so that that day's balance equals the ending balance of the prior statement. Very, very unlikely this will ever happen. Okay, so first let's get into this. And for those of you who are newer to QuickBooks, maybe we're going to go to accounting here, and I'm going to go to my chart of accounts, and I'm going to add a new account. And I'll call it my new bank account. I know, very original. Okay, and we make sure that we set it up as a bank account, right? You can call it checking. Down here it confirms where this is going to go, and I'll click save, right? So that's the first step, if you haven't done that, is just add the new account to the chart of accounts. Now, let me go into connect that bank account. Right now in the sample company, I've got other bank accounts and clearing accounts and things. So ignore all that for now. And let's find my new bank account somewhere here in the bank accounts. There it is. All right, so let's go to the register and actually now let's go to banking. Okay, so my menu, bank transactions, and I want to link an account. Okay, I'm going to pause the recording and go connect my bank account to test this behavior. Okay, so I'm obviously going to blur out some of the information, but just in case you've never done this before, I clicked to log in, I entered my credentials and confirmed a bunch of stuff, and now I'm going to click here to confirm which bank account in QuickBooks Online I want to link this to. And now here's the important part. So you have to consider this. Where do I want to go back to? So in theory, normally, if something like this was going on in the middle of the year, you'd want to go back to January and go back and record all the activity from January, right? If you are not doing that, the question, of course, is why, right? If it's an account that was open prior to this year, then presumably you'd only want to go back to this year because last year by now is theoretically all closed, right? So I'm going to stick with this year, January 1st of this year, and connect. And then we'll find out if it does what it has always done for as long as I've known. Okay, so here's what I can tell you. It did grab the correct beginning balance because I went back to exactly January 1st of the year. And notice what it did. Everything else is sitting in the banking transactions waiting to be added, which of course I'm not going to do. But notice what it does. It sticks it in opening balance equity. I don't ever want this in opening balance equity. It's a terrible account. And if I'm transferring this balance into my books, then it is a contribution. So I want this going into the appropriate contributions account. So if it's a corporation, it would be shareholder contributions. If it's a sole proprietorship, owner contributions. If it's an LLC, member contributions or partner contributions. Any of those. We'll do any of those, but never opening balance equity, because that's just going to sit in opening balance equity forever. Or if an accountant who's paying attention notices it and it bugs them enough, they'll have you reclassify it or close it out to retained earnings or maybe to contributions. So the smartest thing to do is book it straight into contributions when you do this. And the thing to be careful about is if you took the time ahead of time to set up that beginning balance before you connected to the bank feeds, now this entry will effectively be duplicated. So in general, I wish they wouldn't do this, but they've done it for a long time. I've usually seen it get the wrong balance. The only reason it got the right one today is because I happened to go back to the exact statement or the first of the month. Oftentimes, and depending on the bank, they can only go back like 90 days. So depending on what day of the month it is that you're doing this, when it goes back 90 days, if it's in the middle of the statement cycle, then you're going to get the wrong amount here. And that's what's going to get entered. And notice it gets marked reconciled. So even if I'm okay with all of the rest of this, I don't want this to happen. I need to reconcile the statement myself, because here's what happens if I go to reconcile. Notice it doesn't show up in the reconciliation history. There's no history. It shows the beginning balance. If I go to history by account, there's no history. That is a bad thing. I don't want it to do that, so I'm gonna unreconcile it. So even if I did want to stick with this, first, it gets changed to contribution. Second, it gets unreconciled. Then I can do a quick reconciliation based on 12/31/24 in this case, whatever the ending balance is. Well, really, it's the beginning balance of the statement I'm starting from, right? Okay, and then I will have literally just the one transaction to reconcile. Of course, the question is, why isn't it showing this? Probably because it booked it on January 1. Sure enough. So that's also no good. Like, that should be December 31st, right? So let's try that. Go back to reconcile. And there's my transaction. I can mark it. And this way, at least I've got the right starting point with a reconciliation on the books with the proper history, and then the beginning balance, and everything can roll forward nice and clean from there. This is how you get a beginning balance onto the books, okay? And let's just check one other thing. If I want to go back to my bank register, okay? This was recorded properly as a deposit. Now, if it happens to be a credit card account that you're doing this for, then we can go to create a new transaction, right? And you're going to just do an expense. And of course, you'll choose the credit card account, right? And you'll just put in a charge for whatever its starting balance was going into the year. As of December 31st, make sure you enter the right date. And this time, since we're transferring a liability onto the books, we're putting a burden on the books, right? Then it should be distributions. Right, because we're also assuming this is a personal account, or was a personal account that's now going to be used for the business. Then having any beginning balance going in is effectively saying we're going to have the business pay off whatever he or she owed on the card, right? So, okay, now that we're all cleaned up, you understand, and the simple answer, bottom line, is that when I am transferring an asset onto the book, such as a bank account, it goes to contributions. I'm contributing value into the company by contributing either a bank account's balance, or if I'm contributing inventory, that's a contribution. You have to ask yourself, where did that inventory come from? If it didn't already belong to the company, it means I'm contributing it as the owner. On the other side, if I'm contributing any kind of liability to the company, I'm putting a burden on that company's balance sheet, effectively, because now the company is going to end up having to pay that off. That is effectively a distribution. So if it's a credit card balance, it goes to distributions when you enter this opening balance transaction. Never, ever, ever use opening balance equity. At best, it will stay there forever. At worst, it'll get closed out to retained earnings, and then retained earnings won't really reconcile properly. It belongs in the respective owner's equity account for contributions or distributions, depending which way it goes. End of story. That's the way that works. That's the proper accounting treatment for anything along these lines. That's my story, and I'm sticking to it. As always, I hope you had some fun here along the way. I hope you learned something, and I hope you're having an absolutely fantastic day.